Welcome back to the live room. Good morning, good evening, good afternoon, whatever time it is, wherever you're at. Hope you're having a good day. I'm excited. Just had a fantastic batch of coffee, which is good. Always good when the coffee comes out just right. It's also funny that yesterday we did our Trader Coffee Break episode about routine and almost broke my routine this morning as I, for some reason, couldn't sleep and I was about to wake up and just come down to like 1 o'clock in the morning and start doing work. And that always ends bad and probably would have canceled the live room, but thankfully was able to catch a few Z's. Or she says, nice and sunny. It is cloudy and rainy here. I feel like it should be the opposite, but oh well, it is what it is. Anyway, let's get started with today's live trading room session. Nothing really of importance on the economic calendar today. I did read an interesting article about the volatility in Forex trading specifically having been picked up since earlier in the year, which is pretty cool. And no doubt that's why we're seeing a lot of opportunities in the market. By the way, Aussie dollar traders, way to sit with that one and see it out. If you guys remember, we were trading that a few days ago. Kind of went sideways for a day in yesterday's sideways action and then came down and smashed target ones. Speaking of a trade that we looked at already, pound Swiss. This was Monday's trade. You guys remember this one? Playing the bounce off previous resistance back across the channel. That one ran through pretty nicely, straight from the top to the bottom. Didn't think it would go to the bottom. Remember, we're looking at a much higher area for targets, but we rode all the way across and now we're back down. And the trading opportunity that we want to look at today, dollar Swiss as well, a lot of the Swiss pairs, is going to be on the Euro Swiss. Euro Swiss is very similar to this, but this Euro Swiss presents a little bit of a different opportunity. And I'll kind of compare the differences right now. So what I'm looking at on this pair, and hopefully it's still available on the Euro Swiss, but is a structure-based trade based off coming in the previous levels of structure support, right? Do you guys see that at the bottom? Previous structure support, those lows, those lows, those lows. The problem is, as far as identifying the actual opportunity that we have to trade, is that we have some underlapping levels of structure as well, right? So we have these main levels down here, these main lows, but we have these spikes that are a little bit higher and these spikes that are a little bit higher. And for me, right, whenever we break and close above these levels, or below these levels in this case, those become the future levels that I can shoot for target. So it's very hard to do a target selection here since those levels of structure are right there. Euro Swiss is in a different situation, at least it was. Let's see how much we've retraced. Euro Swiss is a little bit different. We're not necessarily at the same level of structure. We don't have the same sideways channel, so sideways support that we had on the pound Swiss. But you can see that this was a pretty much straight and direct move to the downside. So there's a lot more opportunity to the upside with targets, right? So I know we've been having conversations lately on, and this is something you don't get until you actually start trading, where, you know, it's you always want to do analysis. Analysis is important, but part of your analysis, and as you become more locked in on your specific trading style, part of your analysis and your ability to quickly see whether or not there's potential on a situation or not is just knowing how you take targets, knowing where you take targets. And you can kind of get, I don't know how to explain it. You can kind of get like a full diagnosis of the pair before you decide to dig in any deeper. It's again, I don't know how to explain. You guys know what I'm talking about, though. If you're actually trading, you know what I'm talking about. It's this tunnel vision that exists where, you know, you imagine yourself as a robot and you're looking at opportunity, entries, stops, and targets, and you're doing this quick initial scan where you're and like if all's green, then, you know, boom, I dig in, I lock in on my target, and I kind of focus on it. If one is red, then you know that, hey, I'm going to go to my next one. It's very interesting, and I don't really know how to put it into words aside from that. But it's one of those things, if you know, you know. So we're going to dig in on the Euro Swiss here. Euro Swiss, we were in this consolidation pattern. We were in this wedge. Excuse me, voice dying already. We were in this wedge pattern here, broke out to the upside, came back down to about the midpoint of the pattern. Now, this is important. Maybe you can see I have my volume profile here. We take from the swing high to swing low. I'll draw that back on so you guys can see how I did it. Swing high to the swing low of the pattern. So normal swings like we always do with Fibonacci's or anything else. And you'll see that we have the bulk of our volume right here in the middle. Now, this is something that I was taught, or I learned, I should say. I wasn't taught this, I learned. But I've never actually researched it in myself. But I learned that kind of the area in which you're looking to determine if a breakout is a true breakout or a false breakout is the midpoint of the consolidation pattern. So if you have a wedge, if you have a triangle, price, if it's a true breakout, so meaning after we break out to the upside, like in this case, if it's a true breakout, we should not go past the midpoint of the pattern. Now, again, I don't know how true that is. If you guys have ever dug into that, let me know. I just never have looked at it. But always an interesting thing that comes in the back of my mind whenever I see something like this. So the fact of the matter is we're retracing into this pattern. We can be looking for buying opportunities. Now, unlike the pound Swiss, we're not at structure here. And I don't know if George is in here, right? You know, George, we're going over George's plan over the last couple months. And George has different rules, right? And very similar to how I trade as well, where if we're at structure, we can enter more aggressively. If we're not at structure, we have to enter more conservatively. And that's just kind of the different dynamics of that you could have in your trading plan as far as entry goes, right? This is one that does not come into structure. So this would not be able to be an aggressive entry for me. So let's go down to our lower time frame. Let's see what's happening here. We have on the hourly. We can already get an idea of if we get a chance to enter this trade, where we're looking for targets at, right? Our nice little pregnant pause right here ends up being a nice little structure swap zone, elephant candle, right? Everything you kind of need in the target area. Let's go down to the hourly. Earlier this morning, we had a pin bar. That was, 6 o'clock this morning. Let's see what has changed. Pin bar, higher high, higher close. So for some of you guys, this may be an entry, right? 3-bar reversal, right? High momentum candle down. I'm actually going to bring on my volume, regular volume, to see what this looks like. It'd be interesting to see if we see any anomalies. Not looking at volume too much, but let's see something real quick. See if we see any anomalies between these patterns or between these candlesticks. That's what we're looking for, right? So we have a high volume candle right here. We have a candle that is almost, not even half its range with similar volume. Then we have a higher, a greater range candle with less volume. So this isn't necessarily a good sign for a bullish breakout. So it wouldn't surprise me if we did get a retracement and a double bottom. But we can go ahead and measure this out, because this is also a good example of having alternate targets, or alternative ways to get involved in the move. So let's say that you are someone who is using this 3-bar reversal, this higher high, higher close as an entry, right? It'd be an at market entry right at the close of this candle. If you're someone that is shooting for, let's say, the bottom of the structure zone, your target's going to look like that. Let's say we're using an ATR based stop. What is my ATR? My ATR on my entry candle, my average true range, is 23. So that's going to put me at my lows here. Time for math, right? 102.30, so 102.07. Right here. What do you guys think about that risk reward? Yay or nay? Hey, Vincent. Yay or nay to the risk reward? Nay. All right. So let's say you are someone that wanted to enter this on an aggressive entry like this, and you look at it You measure it out. Risk reward is not in your favor. You have two choices, right? Well, you have one choice, follow your plan. But within your plan, as you think about developing it, you have two potential choices. One, just poo poo the trade. It's done. It's over, right? Throw it away. Two, perhaps you have in your trading plan or think about in the future putting in your trading plan an alternative reason for entry. An alternative reason for entry could be a double bottom, right? So we can do this trick right here. We know where our targets want to be. We know where our stops are going to be. That ATR isn't going to change too much. If anything, it should get less because as we form more candles, it's going to take the average from this big candle away. But we'll know that as long as I get an entry below this 50% line right here, then I have my required risk reward, assuming it's a 1-to-1. Obviously, you want to mark it off for whatever that risk reward is for you. And then you can enter the trade. So if price action comes down and does something like this and gives you a double bottom right here, well, now you've got a risk reward you can work with, right? So we don't necessarily want to give up on a trade if it doesn't give us what we want at first. And again, this is something that will come in your trading over time. I always use my example of when I first started trading. And when I say first started trading, it wasn't, when I first started trading successfully, very, very strict. So in a situation like this, if this were my entry technique, I would just throw it away. I'd just be like, nope, didn't give me my entry, throw it away, next opportunity. But over time, you start to learn that the market will offer second chances. It will offer third chances. And as long as the integrity of your trade setup isn't sacrificed, you can potentially take advantage of those second and third opportunities to get involved and still have a chance to get in the trades that you want to get involved in. So this would be a good example right here. I'm going to get this into our pro trade log real quick, and then we're going to come back and talk about another future example. But if you have any questions so far, type it in right now. I can't do two things at once. So give me a second, get this into the pro trade log, and then we're going to come back and talk about another future example on this same pair. What is this? Euro Swiss? Euro Swiss 1 hour potential double bottom bullish. That should be known. Let's get this in. Ollie says, I have a question. Sure, shoot it in. Darn it. I asked for you guys to shoot in questions, but not thinking you guys would actually have a question. What do I do now? And apparently I still don't know how to spell potential, guys. Potential. I'm horrible. This is why I trade and I don't write. Ugh. English teacher would be so ashamed of me. Miss Coons, I'm sorry. I failed you in life. All right. There we go. Get this in the trade floor. Get it onto the main chat or the pro trade log. There we go. Yeah. Whatever. Philadelphia public school education. We don't learn that stuff. We never learned the word potential. We never had potential as urban inner city students. No one ever told us we had potential. So didn't hear that word ever. Our fate was sealed. There was no potential. It was just a life of crime and poverty. Maybe sports. Of course, being a successful hip hop artist too. That was always in the equation. Sports, hip hop, poverty, or crime. 4 choices. Choose. That was our career day. Our career day. Crime, poverty, sports, music. You decide. But Miss Bellew, I want to be president. No, these are your 4 choices. You can't be president. It's funny, but it's kind of true. That's why I got to break the mold. Anyway, Ollie says, I have been lately missing 2 setups. And also once forgot to set orders. Do you guys have any advice for this? Has anyone ever had the same challenge, or is it simply that I just need to be more focused? Yeah, I think you need to be more focused. Why are you missing them? Did you watch our coffee break episode on routine? Do you have a trading routine, or are you kind of doing whatever you want whenever you want? But the biggest question is what? Why are you missing them? What is causing you to miss? What is causing you to miss these setups? Are you missing them like you're never actually seeing them? Are you missing them as if they're on your radar and then you just forget to go back to your computer? What type of miss is it? Because there's different type of misses. There's a miss where it's like you do your post market analysis later in the week and you're like, oh man, we had all these opportunities during the week that I missed. And then there's missing where it's like it was on my radar, it was in my analysis, and I just kind of didn't come back to my computer at 1 p.m. So which one would you categorize yourself in? Bum, 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 bum. Then I do want to get to the second part of this, which is I guess we don't really need to talk about it. But while I was answering this, I was going to talk about future head and shoulders here as well. This type of setup, specifically, if we are going to continue up, this has small head and shoulders written all over it. Where we come here, we do a little dance again, and then we have opportunity from this level back to this level, if not beyond. So that's the secondary opportunity. We probably won't see that this week, but something to put on your radar for next week, especially if we get that move. Or again, speaking of secondary opportunities, if you're someone that can't get this move, let's say the double bottom never happens and we just shoot straight up, right? Again, just don't throw away this analysis, right? There's still more to it. So you may not be able to get this one, but you may be able to catch that one. So kind of always stick with it. Always stick with it. You never know when the market will give you second chances. Someone on TradingView and Ali wrote in followed up on the question. I'll get to that in a little bit. I am new to your channel. Do you cover US Tech 100 in your videos? Usually not. I typically stick to Forex, but what we do here in the live room, if someone has something they want to look at, and it involves technical analysis, then we take a look at it. Now, here on the live stream, Trade of the Day live stream, what you're watching is we only go over one trading idea for the day. So it usually won't be that because that's not something I put on my watch list. But if you ever get a chance to hop in the live room and, we go for a few hours each day and you want to look at something specific, shoot it in and we'll provide the technical analysis on it. That's the cool thing about technical analysis. It can be taken on, or it can be done any market, any instrument, any chart, any time frame. It is all the same. Obviously, different markets, different time frames have specific tendencies, but the general principles are all the same across the board. But usually we won't look at any here in the live room just because I don't personally trade them. But if someone requests it, we can. Real quick on YouTube, and I'll get to Ollie's question. How was it when you first deposited money into your broker's account? Were you nervous? No, I was very excited because I thought I was going to make a lot of money really, really quickly. So I had a lot of success in the stock market, and I got into Forex. Well, I guess I was nervous when I made my first deposit into the stock market, but no, I wasn't even nervous then because it was money that was supposed to be used for investing. So that money had purpose, and I knew exactly what that purpose was. So no, I wasn't nervous. I had the regular nerves while like taking trades and pulling the trigger, stuff like that. But as far as like depositing the money, no nerves in that. Just the normal nerves that come when it comes time to buy or sell, and you're like, it's really happening. And of course, you push the button and you automatically go into like the red because of the spread or the commission. And you're like, darn it, I'm a loser already. You always start off as a loser. So that was, that's not fun. And then you just realize that's part of doing business. But yeah, no nerves. Remember this, just because you deposit money doesn't mean you have to use it. You could deposit money, it could sit there for a very long time, right? It's not being used until you actually trigger a trade or something of that sort. So no nerves in actually depositing it. The trading, on the other hand, that'll get you sometimes. All right, going back to the missed trades and trying to identify why we were missing these trades. For example, this morning I checked the market from my phone. That's one problem right there, unless you don't have any other options. But you probably shouldn't be checking from your phone unless you're following up on a specific alert. I check the market from my phone when I wake up and I look and there is nothing. And when I looked at the market 1 hour later, I noticed a market pattern I missed earlier. Okay. So did you sit down and do a full analysis or did you just peek at your phone first thing? Like, did you actually do analysis? Because when you say I check from my phone, I mean, technology has changed, but maybe I'm old school and I'm saying this. I don't think you can perform legit technical analysis from your phone, like from a mobile device. Like, I think you can check up on things. And again, I know technology has changed, and maybe I'm a dinosaur now, but I think it's very hard to perform legit technical analysis, pre-market analysis from your phone. I think a phone is good if you already have analysis and you're checking. Let's say you're waiting for this double bottom, so you've done your analysis already, and then an hour later on your phone and saying, "Hey, did the double bottom happen? Okay, no, or did it happen? Yes." But as far as like a full top-down analysis, I don't think it could be done from your phone. I think it's very difficult to be done from your phone. And again, I preface that by saying again, I could be a dinosaur, I could be old school because I started, even though I still think I'm young, I started before this stuff was available on phones. But it sounds like you just did see. So here's the thing: I just did a quick analysis from my phone. So here's the question: how come you did a quick analysis and not a full analysis? What made you decide to do a quick analysis instead of taking the time to do a full analysis? Because it sounds like the problem is, and this happens with most things in life, is the shortcut. Whenever we try to take a shortcut, whenever we try to do stuff to save time, whenever we try to put a band aid on a gushing wound, we end up getting bit in the butt. So it sounds like you tried to be quick. You try to do a quick scan, save as much time as you can. Maybe you just woke up, right? We talked about this yesterday that both Jason Grayson and myself, we have a pre-analysis routine, right? So we do check the charts first thing in the morning with any open positions or any like situations that are on alert. So if I have a pending order that was open over the London session, I want to check it because I'm fast asleep usually during the London session. So I want to make sure that it got filled or didn't get filled. If I have a trade on the board, I need to make sure I need to manage it. Do I need to move stops? Do I need to adjust anything? Right? We do that. But after that, we take a break, right? I take about a half an hour, right? I mentioned this in the FX Trader magazine article to do my secondary wake up. So after I'm awake, I do other stuff until my mind actually catches up because despite me having the ability of being able to pop up and do backflips out the bed in the morning, my mind takes a little bit of time to get sharp. So I do other stuff, right? Jason said he sits in the dark and stares out the window for a half an hour, which is, to each his own. But it sounds like you got up first thing, crusty eyed, stared at the phone, did a quick analysis, trying to look for the shortcut. Did I see anything? Didn't notice anything right away. And then when you actually woke up and your mind was a little bit sharper, you notice that you missed things. So my advice would be this, right? One, take time to wake up before you do your analysis. Have a routine, right? I don't know what time you wake up, but if you wake up 5 o'clock, right? Start your pre-market analysis at 5:30 and then do it every single day at that time from your computer, from your desktop. No distractions, right? Turn everything else off and focus only on your analysis. That would be my bit of advice because it sounds like you went for the quick, let's check the box and get it out the way. You weren't necessarily sharp in doing it, and then it came back to bit you in the butt. Jay says, "Oh yeah, sorry, Jay. We only look at one trading opportunity here for the live stream on YouTube, and we've already done that. Every once in a while, we do a viewer's choice. But if you want to look at more, hop in the real live room over on the platform, and we're here for 2 hours, and we look at whatever people want to look at. But we've already done our one for today, so I apologize." But yeah, that's what it sounds like for me. Did a quick analysis on my phone. Maybe that's the issue. I only trade patterns from 60. All right. So what time do you wake up, Ollie? Or let's ask you this first. Do you have a routine? Do you have a trading routine yet? I'm trading from the middle of the jungle if you can't hear all the birds and creatures in the background. Probably annoying for you guys, but I love it. It's peaceful. The birds chirping, the dogs barking, the kids screaming. Ugh. But do you have a routine? Yes or no? Yes or no? I want a yes or no question. Yes or no question. Shouldn't take this long. Yes or no? Yes or no? Do you have a routine? Normally, I don't like the word normally, right? I don't like the word normally. Those are one of my words. Normally, usually, sometimes, often. Normally I wake up 4:45. Now I started a new routine to go to sleep every night at the same time that I wake up without an alarm at 4:45 to 5:30. Okay. What time do you need to be at work or leave or what is there a time where you can't do anything like on the charts anymore? Like, do you have any restrictions in the morning? Do you have to go somewhere or do something or be present? Okay, you only work on weekends. So I would say this, right? So let's say your wake up is 4:45 or 5:30, right? I would put, see, and so there's no reason to rush. If you have nothing to do, there's no reason to rush, right? I thought you were gonna say like, I wake up, I gotta head out to work 6 o'clock in the morning, so I gotta get it done. There's no reason to rush. So wake up, give yourself 30 minutes, 15 or 30 minutes to do something else. Check scores, check email, watch a cute cat video on YouTube, listen to an episode of the Trading Coach podcast. New episodes every Monday, Wednesday, and Friday, wherever you listen to the podcast app, now on Audible and Amazon Music. All right. Do something like that for 15 minutes. Most Trading Coach podcast episodes are under 15 minutes. Perfect for that part of your trading day. And then do your full analysis. So say 6 o'clock. 6 o'clock, if you want to have a solid mark, 6 o'clock, I do my pre-market analysis. You turn all distractions off. You lock in. You take out your notes. You take out your, if you have a kind of a journal, whatever like that, whatever you use. And then you lock in on your analysis and you focus on whatever you're supposed to focus on. And if you do that, if you do it thoroughly, you won't miss anything. But there should be no excuse for rushing analysis, especially if you don't need to go anywhere. But that's why you're missing trades. And I would do the same thing when I had, and I'll get the live streamers out of here in a little bit because we're going on a half an hour somehow already. I told you guys when I used to trade like 20 pairs because I wanted frequency and more was better. And 20 pairs is a lot, and I would find myself getting lazy by the time I got to like, after I got past like pair 10, I would get lazy. So I'd be really thorough for pairs 1 through 10, and I get to 11, I'd be like, I just want to get this thing over with. And I would find myself missing a lot of trading opportunities just because it was more about completion versus analysis, right? It was more about how can I just check the boxes and get done pair number 20 versus actually do thorough analysis. And I was missing a lot of opportunities because, especially on the later pairs in my portfolio, because I was just kind of just clicking through them quickly. So give it a try. Live streamers, YouTube Trading View, thank you guys for joining me. Please do me a favor, hit that like button on the way out. If you're not subscribed to the YouTube channel, make sure you do it. That way you don't miss the next upload. Lots of cool content here, thousands of videos on the YouTube channel. Of course, if you want to, head over to tier1trading.com, join the community as well. Start your journey to become a consistently profitable trader. But I will see you guys this weekend with a weekend video, hopefully. I got a busy weekend, so we'll see if that actually happens, but I'm going to try my best. If not, I'll see you guys Tuesday for the next live stream. Live rumors, where would you guys like to head to next? I had a few things on my radar this morning, not a lot.